Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free video report for Wednesday, June 22nd, 2016. So let's get started. I got a lot to go over here. At Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that's what creates market opportunities. Now, we find these opportunities through Woody Dorsey's investor sentiment data, and that pretty much lets us know how everybody is feeling about the market, and that's important because the majority is always going to be wrong. So if you can track and see how things are going, you're going to have a huge trading advantage over the majority that are out there. Technical timing indicators is what predicts when these markets are going to reverse. And I'd mentioned we have a black hole crash that is going to be pending. And from there, we combine things with our regular technical analysis to try to pinpoint where the S&P may be reversing. So the big question that a lot of people have asked is, can the stock market be predicted? And most market professionals are going to say it can't be predicted. And that if you do try to time the market, you're going to just end up losing money. And the reason why is humans don't really like what they don't understand, and they will say it can't be done or you're crazy to even try, but the majority don't understand what makes the stock market move up or down. And there's a select few that have studied the markets for years, the history, and understand the cycles that it goes through, and that the stock market is not random. And in my 20 years that I've been doing this, nobody has been a better market timer in my eyes than Woody Dorsey. And like I said, I've been following him for a really, really long time before I became partners with them. So if the markets can't be predicted, my question would be, this is our September 9th, 2014 black hole. Remember, this was a black hole crash here. We have another one that's pending. So this was on the 9th. He was setting as early as the 18th to the 22nd. It was on the 19th, so you knew almost 10 days ahead of time that this crash was coming. You could have positioned your portfolios and made a ton of money. Now, was that a random one? No. On February 26th, Woody had said that look for declines on from March 4th to the 5th into the 11th to the 16th. That would set up the next rally. Well, here was the drop into the 11th, and here was the rally. So this was just 159 points just on this. So the markets are not random. They can be predicted. And the people that are sitting there saying they can't, and they're saying you just have to buy only, they've gone nowhere for 2 years. And if you are able to just really maneuver your portfolio in and out on just the last 3 crashes that Woody has called, just on the downside, that's over 700 points. Now, the thing is that these calls, you're going to know when the lows are coming too. So you're going to have a very good idea of when to start buying. And as we've seen, the moves to the upside are actually stronger than the ones to the downside. So there's over 1,400 points that you could have made in less than 2 years. And everybody that just says to buy and hold for the last 2 years, they're basically sitting at dead even right now. So sentiment is the missing link. I've gone over that, and there's really only a handful of people and services that actually track and chart investor sentiment. Woody Dorsey's been doing it for, he's been gathering his same sentiment data for over 40 years. So he's had the same polling process, and it's probably the most the cleanest sentiment readings out of anybody in the world, because nobody's really been doing it for all that long. But sentiment has to be interpreted, and that's what he does. Just because you have extreme bullish or bearish readings doesn't mean it's a buy or a short. You have to know when it's coming and when the cycle is ending. And Woody's considered one of the pioneers for tracking and charting investor sentiment. And as I said, it's important because the majority is is always going to be wrong. They always get long at the top and they get short at the bottom. And knowing when these turns are coming allows you to stop following the herd. So sentiment is the missing link. And here are our sentiment charts right here. And you can see we hit a 4% sentiment reading here. And from that, we had a decent little rally. Now, what Woody has put is that there's a black hole environment is coming. We actually have the date on this. I just don't have it in here. And stocks have turned lower, but there's still time before the black hole manifests. So what he's saying is that the markets are going to be rationalized as it's just Brexit. And it isn't. It's everything, and this is just a metaphor of the uncertainty of the markets. So you can see here I have these red arrows, and what that is this was the last drop, and you can see it actually comes right to the same area here. And from that, we got a bounce, which we are getting right now. But look what this is, the black hole right here. So it is coming, and everything is following the same pattern that it has. And you really have to, position your portfolios correctly. So let's just go over the regular charts right now. And when we had this drop right here, my report was done here, and I said if we made a new low, we were going to get bullish divergences. That's the technical aspect of it. And from there, we've had a really, really nice rally off of that. So this bullish divergences are played out. Does that mean that we have to head lower? No. I'm so neutral. It's crazy because I can give you reasons why we're heading up here to close this gap, and I can give you reasons why we're taking out these lows. So if there's no really trading advantage, why do you want to be going crazy on this? We already know when the big move is coming, so I don't have to worry about catching these little things on it. But anyway, if we head higher, keep an eye on the 2106 and then possibly closing the gap at 2115. If it comes down, there's a gap at 2072. You can try long here, and if you do, just put your stop here. It's a very low risk reward trade, and if it holds and heads up, then you know that these will be the targets. Me personally, I'm waiting for, I'm hoping that we're going to get the bounce, and I'd rather short. I just think that is the safer trade that's out there right now. So let's go back to our charts now. And can the stock market be predicted? Well, this was the last one that Woody had called, and this was the kill zone drop. And he had mentioned this on the 4th, that it was coming between the 14th and the 21st. Here it is, and this is your black hole crash. This is what's coming, folks. This is what you have to be positioned for. Now, he's got the first one. He got the second one. He got the third one. Do you want to doubt whether he's going to get the fourth one? I mean, he's 100% odds right now, so not me. I'm going to position my portfolio, and, one of the people that wrote in, I think they bought like 10 of the Spider contracts right before this move right here and made $50,000 in a matter of a week. So that's the type of really the move that we can that I'm expecting. So another black hole crash is coming. Really, the question is, where do you want to be when it hits? Do you want to be jumping in and out on the long and short side, guessing is this the crash? Or wouldn't you rather really know exactly when the crash is coming? Position your trades, because like I said, the last 3 crash calls alone from Woody have gathered over 700 points to the downside. You're going to know exactly when to be buying, and like I said, the upside was even fiercer than the downside. So there's going to be so many points to be made in the upcoming days, weeks, months. It's one of the reasons why I keep going over this, because you don't want to get caught on the wrong side of this black hole crash that's pending. So the choice is yours. If you want to position yourself for the upcoming crash, subscribe now. Until next week, have a great weekend. Take care.